Robert Shiller, who won this year's Nobel Prize for Economics, is warning of another U.S. stock market bubble. He told Germany's Der Spiegel, "I am not yet sounding the alarm, but in many countries, stock exchanges are at a high level and prices have risen sharply in some property markets. That could end badly. I am most worried about the boom in the U.S. stock market, also because our economy is still weak and vulnerable." Zach, he also went on to say a thing or two about the Brazilian property market. He pointed to that as an area of concern. When you think about all of those pieces, what do you make of it?
I mean, I think Schiller's analysis is really intuitive when you break it down to its most elemental level. I mean, he's basically saying the economy in the U.S. is pretty weak, but if you look at the stock market, it's really, really roaring. Ideally, you would think that when the economy was doing well, the stock market would do well, and if the economy was doing badly, the stock market would do badly. You know, people buy things from the companies on the stock market. That's why their stock goes up. If people can't afford to buy stuff and aren't buying a whole lot of stuff, then why would those stocks be through the roof? That sort of is indicative of things being a little bit off. And if you look at the way the Federal Reserve and the Obama administration and Congress have responded to the crisis, they've done a very good job getting financial assets back up after the crash. You know, debt, stock. These things are debt securities. These things are doing very well right now. But most people haven't seen a whole lot of income gains since 2005. You know, if they're back on the job somewhere, in a lot of cases they're making less money than they were before, and there's still a ton of people unemployed. I mean, that to me just signals that something is mismatched there. That could be corrected without a catastrophic crash, but you know, it also could get worse if the bubble continues.